Walk us through what's been going on. How serious do you think this energy crisis is, and what will the winter bring?
Well, I think the energy crisis is serious, and I think things are going to get worse as we go into the winter months. I mean, what we're seeing is just really exceptional demand growth in China. If you look at gas demand this year, it's grown at 17% for the first 8-9 months. Coal demand, for thermal power is growing at about 14%, and supplies just haven't kept pace. Gas demand's been growing about 7% in China, which has resulted in this massive increase in gas imports, particularly LNG imports, were up 30%. But if you look at the coal market, production domestically in China has only grown by about 4%. Imports are down almost 15%. So energy supply is really not keeping up with demand, and as a result, we're seeing 5-year lows in terms of coal inventories, and of course, some gas. We're seeing record low gas inventories really across many parts of the world at the moment.
And we're seeing the effects not just from the factory floors in China, but also when it comes to people's homes. At what point, Neil, do you think that this is going to be something that sparks some social unrest? Because, and I have to ask, is it really coming down to China hitting these carbon emission targets, or is it really coming down to just a lack of electricity out there?
I think, there was an element of provinces trying to meet energy efficiency targets. I mean, I think 2/3 of provinces in China have not met their targets this year, but increasingly this is morphing into, basically supply constraints on both coal and gas. So as you said, we have seen cuts in power to industrial consumers, but it's spreading into the residential sectors, and in parts of northeast China, we've heard some stories of traffic lights even being turned off. So it has reached. I think large parts of the market now. I think a lot is going to depend on really, how cold this winter ends up being, because as you know, energy demand in China as we go into the winter period is heavily driven by seasonal heating. If we are going to see a colder than expected winter in China this year, then that could really exacerbate the situation, just given the low stock levels that we've both got on coal and gas.
Is there something that Beijing can do to contain the surge in prices right now?
I think they are doing a number of things. Obviously, shutting parts of the economy where you're seeing very high levels of energy consumption. So I think that's one of the measures that they can take. I think they also need to increase imports, particularly on gas. To make sure that stock levels are sufficiently high, for the winter months. But obviously, we're seeing record high spot LNG prices, so that's going to be very expensive. And then in terms of coal supply, I think we also need to see supply side measures. To boost, capacity, into the market to try and replenish some of those stocks. So I think there's a number of measures that the government can take, but just given how close we are to winter, I still think we're going to see some bottlenecks grow.
And there's been some sources that Sinopec telling us that Sinopec bought at least 13 cargoes of LNG and outbidding some of their European rivals and paying quite a wide premium. Do you think the return to the market from Sinopec, is that going to scare a lot of buyers in Asia and trigger more panic buying?
Well, I think it just adds fuel to the fire. What we're seeing really on gas is very much a global crisis. European inventories are about 70% of where they normally are at this time of year, and what we're seeing in Europe is buyers really rushing to boost supplies, particularly of LNG. Into the market to raise supply ahead of the winter, and China's effectively competing with Europe for those supplies. So I think you'll see more companies come out to buy some of these spot LNG cargoes that are available to try and make sure that the market is adequately supplied. But when we've got spot LNG at $27-28 an MMBTU, which is in oil equivalent terms over $150 a barrel, this is very, very expensive gas for China.
Your latest report here when it comes to PetroChina, downgrading the price target there. Walk us through and quantify the losses for us. I know last week you already downgraded some of these gas distributors. What sort of pain are we in for?
Yeah, I think the risk is that we're going to see a margin squeeze as we come into the winter for the distributors, as basically the cost of gas increases, but they're unable to pass that through to consumers. For PetroChina, which is the largest gas supplier in China, the issue is that domestic prices are regulated. They don't change. But obviously imported gas costs are going to increase with the oil price and with these spot prices. So, we expect PetroChina, which imports about 85 billion cubic meters of gas, every year, to see losses in the second half, which could be, over 20 billion RMB. And that's really going to weigh on earnings, for the company. So for investors looking to play the spike in gas prices, we would look at some of the other names like obviously Gazprom, Cheniere, or Woodside in the region is better ways to play that pricing upside.
Real quickly, your forecast for Brent, the end of the year, Neil. What is it now?
Yeah, our short-term forecast is about $80 a barrel, and we're kind of there now. And I really think that if we see this slowdown in growth in China, particularly if the Evergrande situation plays out in a negative way, that slower growth will reduce imports of crude from China. And so I think, if you look at the market, I think, there's no reason to believe that prices will go materially higher. I think the one upside risk here is that if we do see gas and coal shortages, there will at the margin be some substitution into fuel oil, gas oil, which could help boost demand in the short term. But, I think, beyond 80, I don't see prices going much further.